Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today started out on, I guess, a positive foot, and it was a little tricky because, you know what, a lot of the names that we follow, a lot of the high beta tech names that were acting decent were really strong. They were strong in the first 15, 30 minutes, while the S&P or the market and the indices felt heavy. So the question was, what was going to win? What was going to pull what? Was the S&P going to pull those names lower, or was, you know, the S&P going to hold firm in this lower range and lift, and then relative strength comes into play, and these stocks that have been acting really well take off? What happened was the S&P got weaker. Lots of those names started to fail, and you had to figure out where you wanted to sell or what your commitment level was to them. Did they trade through yesterday's high and then come back below? Was that the sell? Or did they go negative and then give you the sell signal then? It all depends on what you were doing. And or were you at least long some of those with a spider hedge or whatnot, or lots of different ways to play it. Bottom line is the overall market was weak. The DAX and the European indices that tried to bounce couldn't, and it still feels as if you know, there's a lot of pressure out there. There's some individual names that are worth owning if you have them long term, and there's a lot of even trades that have been lasting multiple days. But ultimately, it feels as if you know, that geopolitical headlines with Russia, with, you know, just there's so much going on with Iraq and ISIS, and then Israel and Gaza, and, you know, just the data being weaker in certain places, the sanctions. Just let's go to the charts because we know those a little bit better. So anyway, you know, all in all, you know, this is when the market started to change. When you had some faulty signals, the S&P broke below 1970. That was water gun to Cabeza call, meaning to get out of the way if we broke this accelerated trend, because that's what we follow. You know, actually the next day, the market confirmed that call with a break of 1952. Since then, it's been tough. I admit it. You know, some stocks have been acting well, but the overall indices have been weak. Every time, you know, it trades below a level, it comes back above and doesn't close really that far off. And today we actually are closing a little bit below the prior low, and it just feels as if you know, you go to the basic, let's go to the 150 day, because that's what held the last time. A lot of other indices are breaking below. You know, it feels as if this 150 day could be a target, and that would also test where we broke out from right here, which would be kind of nice. I'd love to see it, and I like to be long certain things, but I like to be long at compelling times. And, you know, to be honest, up here, you know, the longs didn't feel right. They were thin, there was air pockets, they were hard to trust. So down here, if we can get there, you know, that would make things a little bit better, and maybe people wouldn't feel like they're chasing, and that to me would be healthy. We'll see if we see it. You know, right now at this point, you know, I don't know why we would just stop right here. You know, we're about 4-point-something% off the highs, and it just doesn't feel like this should be the area. You know, maybe this, and then you even have the 200 day. We'll see. The diamonds themselves showing relatively weakness. You know, they broke their upper trend also, below the moving averages. Actually, someone said they're below the 200 day, but it's right on that 200 day. That's a weaker group. The Qs is a stronger group, but it's hovering. You know, this accelerated trend broke here when it, you know, closed below the 8 and 21 day, and now it's trying to hold the 50 day. If the 50 day doesn't hold, you know, chances are you're going to see some lower prices, and that'll intensify probably the other weaker sectors. And that's what's going on here. You know, the question is, the weaker sectors that are below, just say, the 150 day, because the S&P is not there yet, like the Russell, like the industrials, like the home builders, even like the financials now, like are they gonna, you know, you don't want to start buying that dip there if the S&P plays catch up, because the relatively weaker sectors probably go lower. Same way if you want trying to play tech for relative strength, if just say the SPX gets down to the 150 day, which is another 20 handles lower, that means the Qs will probably break the 50 day and see the 100 day or something. So there's a lot of push-pull going on. So what you want to do is not be too heavy and take trades, because you've been able to use that the red dog reversal and the bounce H sell setup. You know, and that one's been actually working better because the rallies are being sold quicker. So, you know, let's take a quick look at the Russell. You know, it right now is still below the 200 day. Still above this little pivot here, okay, and at some point if it breaks below this 110, you know, you then have a very big level down here at 108, so we shall see. Remember when this accelerated trend broke, this is when I talked about the 8 and the 21 day with Patty Dom, and it's been down ever since. The financials, we said watch Bank of America. How would it react to the settlement, the finality of it? And P.S. It's still in this lower range below this area. This too broke that accelerated trend. That's when all those stocks looked good. Remember Citigroup at 50, Morgan Stanley at 33, Goldman. Well, they all broke those momentum levels, and I haven't really touched them since. Now the question is, will the banks break below here? Bank of America got rejected by that 1540. Still looking pretty ugly, overall. You know that I've been a Bank of America fan for, since $8 or so. At this point, it's just not showing me anything worthwhile yet. That was way back when. That was all the way down there. And then it gave you a little, remember last quarter, the breakout failure, and then this trend broke when it broke the 8 and 21 day. I don't remember the last time, Bank of America has really been above the 8 and 21 day showing relative strength. It's tried a few times in here, so that tells you it's just really not a trade. If you're still in it as an investment, that's fine, especially if it's cheaper. Maybe just sell some calls around it to, wait out this this time period of monotony. So let's go to what's acting well. Netflix. Talked about in the morning call. With also I think I talked about with Bob Lang when he was here, and it was in my morning note as a focus as one of the strongest stocks that had a day one yesterday. Gave you a chance to buy it right here, and look at that clean move, very strong. This is showing go-to status. It was tight. That's your red dog reversal. Day one, day two, in the face of a very weak market, which gave us all a bunch of cross currents in our head. How could Netflix be so strong if the S&P can go maybe to 1885? Who knows? So that's what caused the push-pull. Anyway, nice day in Netflix. We've been focusing on Tesla too. Tesla has been acting very well. This was its earnings day. When the market fell, I think 2%, it was up. Then it gave you a trade through here, and now it's, it's going higher to extend it, so it makes the pullbacks are kind of hard to trust, but it still looks really good. This is the old highs here. I'd much rather see it base a little bit. Oops, sorry. Instead of just, crawling higher, because we all like it when it's tight, and it's just kind of trending and it's extended, so it makes it harder. Well, this market's very hard that way. Then you have like the devil stocks. I feel like Twitter and Facebook have turned into a mess, where the first half an hour they're like a bat out of hell. You have to grab them quick, but then as soon as the first pullback happens, you don't want it because it turns into a bigger pullback. Facebook, still hanging around, but it's very sloppy and hard to trade. If you're in it versus pivot, just don't add, and maybe it's easier to hold. Twitter, this got me good today. Like it looked great. It looked like it was going to take out this 44.10-ish or 44.20, and then it failed, and it stopped me out. If you're in it still from this pivot, congratulations. Make sure you use 42.75 as a stop. This is a bit of a red dog topping tail. It could be just a day in the life. Look what happened here. The next day got negated. It could be just the market scared, because if it goes lower, this is a high valuation stock with a big gap. It's still above the 8 day. So as a swing, it's fine. As a trading vehicle, it's been hard lately, and that's the truth. Apple perked up and then, and then closed relatively weaker. I tried being long it, and I basically got stopped out. Made a little bit of money selling some strength, but then wasn't fast enough to sell it all. When it went negative, I got out, and now, it's grinding down to the 50 day. We'll see how it does at the 50 day, maybe even tomorrow. But overall, this has been a great vehicle since last quarter. Lots of trades, one right there, nice descending channel right here, and now it's just it's a question of what potentially is next here. I still don't think the highs of the year are in, but it's acting a little wishy-washy. The next time it maybe tries to get above 95.60 with some authority, we can get a little bit more aggressive. But for right now, it's it's pretty churny and it's not great. And some guys are calling on a little bit of a head and shoulders top area with the neckline, and that would give you a move from like 99 to 93 down to, maybe here-ish, or even a little bit lower. And if that's the case, then this market's going to be, 6, 7, 8% off the highs in the S&P, and the Qs will break the 50-day with force. So at this point, let's watch Apple around here, and let's watch the Qs at the 50-day to see what's going on. If Apple holds this, it's going to be hard for the market to get that much more downside follow-through. Google, nothing worth talking about. Still hanging in here, but red day, green day, red day, it's not easy. You have to just take I guess, trades on the 5-minute chart. Amazon, still, no gap fill. There's little peanut type trades, but what? Anyway, this little this little spot, let's see what happens next. Big gap here, still broken below the moving averages. Comes out with news every other day to squeeze uncommitted shorts, but not really compelling whatsoever. Priceline opened up real strong, and then came in, and you still have a pretty big level going across, at 1300. Casinos, wow. LVS, thank goodness it showed its hand right here when it went below the 200-day, and then, hopefully you got out of the way. Some guys actually made money short. If that was you, congratulations. This was a big level that it traded below, and now it's kind of in no man's land. Win also, I guess, played catch-up. If you saw LVS do that, hopefully you said, oh, I got to get out of Win, especially since Win did not hold, this mid-level area, which made it look good. Remember, 220 was going to be a nice pivot. Well, it failed here, and you had to get out of the way, and now it's coming close to the 200-day, and it's still pretty weak. I don't know, guys. I feel like there's a lot more weaker stocks and stronger stocks. Maybe we're being a little bit lulled on the side because, Netflix was good and Tesla was good and Facebook and Twitter give us some trades here and there, while the rally is getting more narrow. Other stocks are kind of being thrown out the window. What's Caterpillar doing? Caterpillar basically broken. Boeing broke. It was a little strong today, but look at that move lower. Coca-Cola, what are you doing? Look at that, one day up like that to get negated. That's pretty gross on Coca-Cola. GE actually was a little bit of a bright spot, but whatever. These are just like these charts, need time. And it's August. There have been some things to do. I personally would like to see a quick move down to 1885. Maybe we get oversold enough where we could catch a nice trade and it'll be a little bit cleaner. This morning we broke above a prior high, so if you were short, you might have got squeezed out, or you might have even said, oh no, I'm going to miss the move back to 1950 and bought some things like I did, and then got stopped out. And then, it went below 1912, and if you were long, you probably got stopped out, rightly so. If you added to your shorts there, you might have got squeezed when it bounced back to 9160. There's a lot of, flimsy, floppy, trades that could take you away from good positions that you have conviction with. At this point, I don't have much conviction. I had conviction that we would break 1970. I also stated that I didn't think the summer low was in when we were trading 1925. Water pistol to something or other. Do I think we hit 1885 before 1940? Yes. It's not a big call, but I'm just thinking that's what we do, and hopefully that happens. So with all that said, I'm going to be trading in short hills tomorrow. So I'll be on the radio. I'll try and, tweet away what I'm doing, and hopefully we've helped, because we've been, granted, I'm not a great short, and I'm not going to claim as if I'm killing it short, catching every move, but been relatively out of the way, which is good, considering that I do make my money when things trend higher. I like to play breakouts. I like to have a portfolio approach, but we just don't have it now. So I'm trying to do some red dog reversals for cash flow, and even trying to, be short a little bit on bounces, but that's been hard, and I'm just trying to do what plays to my strengths so I don't get too frustrated during this time period, because I do believe we're going to have a lot of opportunities once we find the right pivot. And at that point, I'll start getting heavier again and a lot more involved, and hopefully the volume will come back. Have a great night. It's Thursday. It's a summer. Have fun.